Turn now to the private market space. Robinhood CEO Vlad Tenev telling the Financial Times this week that the platform plans to create an AI startups portfolio that, quote, normal people can invest in. That comes after Morgan Stanley agreed to acquire private marketplace EquityZen last month, and Charles Schwab announced last week it would buy Forge Global. We talked to the CEO about that one. Our next guest alternative asset firm has managed private company fund for over 3 years, and it includes AI giants like OpenAI and Anthropic. Joining us now is Ben Miller, co-founder and CEO of Fundrise. Ben, good to have you.
Thanks for having me.
This is clearly a trend. So how does your offering differ from some of the others?
Well, we were first. So when we started, this was a new idea. We actually went to the SEC and said we need to democratize investing into these tech companies. We figured out a new way to do it, which is to create a venture fund that's regulated by the SEC. People invest into the venture fund, it's publicly reporting. It's an investment company, and then we invest that capital into top tech companies like OpenAI, Anthropic, Anduril, ServiceTitan. And so we created a new way for the public to invest into private companies, and now I think you're seeing broad adoption of that.
And anyone can put any amount of money basically in it?
Any American with a $10 minimum. So $10, like, you're an 18-year-old, you can invest. You're 75 years old. It's totally democratized. There's no commissions, no upfront transaction costs.
So how big has it gotten?
So, well, our whole platform is $3.3 billion. Our venture fund's about $400 million. It's our newest product, but it's been doing pretty well. And our success is shows that what's happening is this market realizes these companies need to be investable by the public. And Robinhood, Cathie Wood, I think Coatue, lots of companies are going to follow into the space because it needs to happen.
What's the average investment size? And do you think clients and customers are well educated in the investment, or is it like a parlay sort of environment?
Yeah, so the average investment is about $10,000, and the average investor is in their mid-30s. So this is like a more sophisticated investor. My experience is that people first invest in stocks, bonds, the liquid, and then they graduate up to alternatives. This is not like sports gambling or crypto or prediction markets. These are real companies, massive companies. They should be public, but the markets no longer reward companies to go public, so they're private. And that's a problem that we need to address.
I was going to say, if enough of you guys exist, the lifespan of being private is going to get longer, don't you think?
Well, it's already a reality, right? Companies used to go public after 5 years of being in the private markets. Now they're going public after 14 years. There's reasons that the reason that's the case has nothing to do with us, right? The nature of the public markets, the scale of the private markets. So now it's really just about making sure that ordinary investors are not excluded from these types of investments. The wealth creation we're talking about is in the trillions. And if we have wealth inequality and AI hitting every person in America and they're not participating in that, I think it's a crisis.
So what has the fund returns been like?
Well, so the last 6 months, the fund's up 30%. The last 12 months is up about 40-some%. But, past performance is not indicative of future performance, but it's my regulator is happy about what I just said.
But you get in early. How do you decide which investments?
That's our team. We are a tech company first. We have 2 million customers. I have 100 software engineers. I've built AI. I've deployed AI. One of the reasons we got into these companies early is that we really were using them. Our company, Fundrise, is a customer of about 80% of the software companies we've invested in. So I really understand the difference between them and why Anthropic and OpenAI are both good but different. People say, aren't all the models the same? Aren't they commodity? No, they're not.
Right. Are you guys, I assume you're prepared, at least mentally, for a cycle, right? Where credit turns and maybe some of these returns come down, and you'll have to explain that in a sense to your customers, right?
Yeah, so I've been in this business for 25 years. I've been through 2001, 2008, 2022, 2021, whatever you want to call that period. We have a huge real estate portfolio. We started in real estate. We owned 20,000 apartment units, and we first democratized real estate. And real estate went through a cycle just recently, right? It was 2021, everything's up 40%, interest rates go up. So I know the cycle is the most important thing in investing. And where we are in the question of where we are in the cycle is a big one for AI.
Any ideas?
I mean, everybody has their opinion, so I can give you mine. I mean, my opinion is we're still in the middle innings. I think that when people talk about it being a bubble, you have to look at supply and demand right now. And right now, there's more demand for chips, more demand for AI products than there's supply of it. So they're trying to catch up with that demand by building a lot of data centers. But I've built thousands of apartment units, thousands of homes. Building things in America is not easy. And so for all those, hundreds of billions of dollars of announced data centers, you got to get that built. And I know it takes 5 years to build a data center, maybe 4 if you're lucky. So this is a long, and I think the demand's growing at hundreds of % a year. So you say 3 years from now, 4 years from now, is there really an oversupply? I don't think it's so clear.
When do you think OpenAI goes public, and at what valuation?
Okay, well, that is a $1 trillion question.
Literally.
Is it $1 trillion?
Almost.
I think it's a tough question because the public markets, I mean, if you're trying to drive enormous change, if you're highly dynamic, public markets want quarterly reporting, they want reliability, they want predictability.
Profits.
Well, I mean, they're willing to reward growth, but they want predictability that is that runs against the grain when you're trying to innovate. And so, I think that you need to let the companies mature when in the private markets. Wait till they're ready. I don't know when that's going to be for an AI company like OpenAI, but the public needs to invest in them because AI is probably the scariest thing that's ever happened to Americans around tech. Most people are afraid they're going to lose their jobs. My son keeps asking me, what's a career? He's 14. He says, what's a career I can pursue that AI is not going to put me out of work?
Yeah.
And I'm like, well, you shouldn't worry about that. But he's worried about that.
Venture capital? Yeah.
Maybe that's done by AI too. So my point to the AI companies is if this isn't broadly owned, if only wealthy people own it and tech people in San Francisco and New York, it's going to become highly unpopular when people start to lose their jobs.